FedEx stock is up 8% in the after hours after reporting earnings that exceeded investor expectations. If there was only some guy on YouTube that posted free videos about buying this stock back in September when it was at its 52-week lows, boy, that would be... Oh, wait. That was me. I actually did recommend buying FedEx stock back in September, and it's worked out great. Look, what is going on, investors? Hopefully you guys are doing well out there. We're not going to take too big of a victory lap, but we did recommend buying this stock several weeks ago, in fact, several months ago, and it has worked out quite nicely. Quite frankly, just in the last couple of weeks, the stock is now up 8% in the after hours. That's good for $20 per share. We'll talk about this from a technical perspective as well. We're at a really interesting level from a technical perspective at FedEx. So even if you missed this really nice rally, we were down here at about $218 per share. If you missed this rally from 218 up to 250, well, maybe fear not. It might be continuing. And one of the reasons why that might continue is the fact that FedEx announced a new $5 billion share repurchase plan. Now, look, if you're a fan of the show, you know we cover mostly mega cap tech on this show, or those are the stocks that we really focus the majority of our investments around. And $5 billion, quite frankly, is something that Apple and Amazon and Microsoft, they kind of wipe their butt with that amount of money. But look here with FedEx, we've got a $63 billion market cap on this one, only a 12.27 forward PE. We pay a dividend of about 1.25% yield on this one, a $5 billion share repurchase plan on a $63 billion stock. Guys, that's like 8% of the float out there. And what they also announced is the fact that they're going to accelerate some of this share repurchase plan by $1.5 billion, basically going to go out there real soon and start buying up the shares. Hello, I love this. And this is absolutely fantastic if you're an investor. And I actually think this is what's driving the stock higher in the after hours. Now, the revenue came in the most recent quarter in the Q2 at $23.5 billion. That's good for 14% revenue growth. Now, I want you to remind you, okay, this is, again, a $63 billion company that's probably going to go up tomorrow, obviously by about 8-9%, depending on where the stock trades tomorrow. But that's $23 billion in a quarter, not in a year, in a quarter. And this company has a market cap of $63 billion. So if you're wondering why all your Cathie Wood stocks like Teladoc and Zoom Video and all those stocks have been just crashing and going down, and they're still massively overvalued, well, here's the reason why. This stock is fairly valued from a price to earnings perspective. You're getting paid a dividend. They're going to buy back about 8% of the shares. They're going to accelerate about 2% of the shares. Guys, these are what dreams are made of as an investor. Now, what the company also did is kind of reaffirm their outlook. They're planning to do originally about $18.25 to $19.50 per diluted share. Now, they kept that low end of that guidance at $18.25. I actually think that's what investors are excited about. The fact that we're not going to go down below the low end of the guidance. And we dropped the high end of the guidance by about a quarter to $19.25. One of the reasons why we're actually seeing this is the fact that FedEx is seeing labor pressures actually starting to ease, which, look, not everybody watching this video is really going to be interested in investing in a FedEx, but one of the reasons why we really like looking at companies like this is it can give us a view into the labor market, because FedEx has, quite frankly, a ton of employees. And not only that, their packages moving around really gives us an insight into e-commerce and commerce in general. And I thought what was really interesting is the company said that they had significantly more applicants for its open positions. These are people willing to work for FedEx, basically signaling that the recent labor shortage has maybe even started to recede, if not end. We saw similar comments when we looked at Walmart a few weeks ago as well on an earnings video. Walmart executives said the same thing. Now, look, if you're Joe laborer out there, you want a tight labor market. You want people bidding up the price of labor because nobody is willing to go to work. And FedEx, in order to get you to come apply for their company and help deliver packages, well, they have to drive up wages. Well, this isn't Joe Labor channel. This is the investor channel. And us as investors actually want a really loose environment in terms of labor and have prices, or in this case, wages, either stay where they're at or potentially maybe even going back down, because there is so much demand for people getting back to work. This is absolutely phenomenal news. If not only you're an investor in FedEx, I think this is great news if you're an investor in Amazon, Walmart, Target, any company out there that has a massive base of employees that really work towards that minimum wage, oh my goodness, this could be absolutely fantastic if this continues. We'll see if it happens to do that. Now, speaking of revenues, profits, cost, all those types of things, here's our most recent quarter. We came in at that $23.5 billion. Again, that's up 14% year over year. One thing we were excited about last time we looked at FedEx was this freight segment, okay? And look, I'm not going to pretend I'm an expert in logistics, okay? But I will tell you that I actually made my first, basically the biggest investment, the best investment I've ever made was actually an XPO. I bought this, an XPO is a logistics company. It's a freight forwarder. They do a lot of LTL and those types of things. Well, I bought these shares way back in 2008. Now this is split adjusted. Says they were $2.50, but I think they did an 8-to-1 split. So you have to divide 250 by 8. That is the price I paid. I bought it back in 2008 and I sold it about 10 years later in 2018, somewhere in this $50 to $60 range. And what did I do with that money? I actually bought the house that I'm sitting in. So hopefully that's a little bit of inspiration for you. I'm not at all suggesting you go out and buy $2 stocks, or in this case, I think the shares were actually 30 something cents, and then hope 10 years later you turn that into a house. I got extraordinarily lucky in this case, and I could do a whole video on my investment into XPO. But look, this is what dreams are made of, and this is why we do the investor channel, because I want to make an impact in your life, because investing in stocks totally changed my life. Now, one of the reasons why I got onto that tangent is this freight segment looking really good, okay? And this is what we talked about in the last segment. Last time we talked about FedEx, is the freight segment was the fastest growing in terms of their major revenues. That was the fastest growing from a revenue growth perspective, and in fact, that continued in this most recent quarter, up 17%. But what had me even more excited was the fact that when we come down here to operating income, the freight segment was actually its fastest growing by far in terms of operating profit. Look at that. We grew by 33%. So we grew 17% on that top side, but we grew 33% on that operating income side to $333 million, or excuse me, $334 million on that freight segment. Hello. I don't necessarily think that is going to continue, but it can be a strong business for FedEx. And by continuing, I mean, I think we're still going to see revenue growth. I think we're still going to see operating income growth. I don't necessarily think we're going to see the same pricing power we're right now, but as freight and the logistics of that still remains very, very tight, well, they're still going to earn lots of money from that segment of the business. So we made $23 billion on this revenue side. Now, what I think was really interesting is the operating expenses grew just 15%. Take a look. We went from 19 billion up to 21.9 billion. I think investors were actually expecting more, okay? On this salary side, look at this. This is salary and employee benefits. That's up just 9%. So you grew your revenues 14 and you only had to grow salaries by 9%. I think investors, very savvy investors, are looking at this not only, again, through the lens of FedEx, but we might be able to look at this through the lens of an Amazon, a Walmart, a Target, any of these mass companies that have to pay lots. I mean, look at $8 billion in expenses is way more than fuel. Okay. And even the purchase transportation, their biggest expense over at FedEx is labor. And if the labor market remains loose and they don't have to raise wages, they don't have to pry people off the couch to come to work, those people are actively applying for the jobs. This is great news, not only for FedEx, but really the entire labor market and companies that rely on that. So look, that drove our operating income. So we take our revenues, we minus off our operating expenses, and we come down here to operating income at $1.6 billion. That's up 9%. Okay. Now here's the interesting thing. The two right-hand columns are a 6-month over 6-month view. And you see that from an operating perspective, we were basically flat. In fact, we're down about 2% on that operating side. That's what's showing me that this quarter was fantastic. Okay. Look at the last 6 months. Our salaries, our employees made 11%, or in fact, our cost on that went up 11%. But again, in the most recent quarter, when this was supposed to be a super hard labor market, when we were supposed to see wage increases and all those types of things, well, that only went up 9%. And if we can continue that trend while maintaining this revenue growth over at FedEx, Ooh, my goodness. We absolutely love that. Now, from a technical perspective, we're absolutely loving what we're seeing over at FedEx. Okay, we are absolutely in an uptrend on this one. I don't think anyone's fair to say that. But longer term, okay, we were in this big mega downtrend. It gapped down. We started acquiring shares up here. It peaked up over 250, came back down, retested down here, but this is a low, a higher low, and we've just made another higher low. So now we're sitting right here at 250, which is an area of resistance because we saw the last time we got to about 250, more specifically about $255 per share, the stock got rejected and went down. So this is a critical level for FedEx. If we can get above 255 and start retesting this 260 area, that might show to me that this stock is just on its way up and it's on a choo-choo train, it's on an elevator, it's on its way to an ascent in an airplane, whatever analogy you want to use. This looks super exciting. Now, that's the absolute bull case. You get above 260 and look at all these candles up here. That should just get you absolutely excited, okay? When you make these types of reversals, and when you announce a share buyback program for 8% of the outstanding shares, and you're going to accelerate about 1.5 billion of that, that should get you even more excited. So if this stock can get above really 255, but really technically, I mean, I have it here at 260, but I would actually say it's actually 255. We just need to go up another $5 and put some candles up above 255. And oh my goodness, I'm not going to say we come back up here and retest the highs at 320, but there's stops all along here at 265, 270, 275. I'd be really excited. This is when, if you are in this for the shorter term, let's say you took my advice a couple months ago, you bought some shares, but you're not in love with FedEx. It's just a portion of your portfolio. Up above 255 or even at 250 right now, you can start setting a trailing stop just in case this one starts to retrace. Wouldn't surprise me if this one does retrace, and quite frankly, I wouldn't be concerned about it as long as it doesn't break below the previous lows, which right now are at 240. And look, right now we're at 250. And like we said 3 or 4 times on the video, this company's going to do an accelerated $1.5 billion share buyback when the market cap of the company is only $63 billion. I mean, this is fantastic, okay? And so I'm loving this. I'm loving what I'm seeing. I got in this stock. I'm excited about it. I think we can continue to run. Look, I'll probably want to get out. I'll probably take profits on this one or get out of it as we start moving back because look at this, how volatile this stock is, okay? It went up, it went down, it went up, it went down. I think we're going to go back up, and I think I want to sell it on the way up. You can do that in a number of different ways. You can start selling or setting stop losses underneath areas of support as you start to break them, or you can set trailing stops on the way up. I'm going to let this baby run because I think that buyback and this labor market news are extraordinarily bullish for this company. And obviously the next quarter earnings will have a lot of this fourth quarter. Those will probably be very good as well. When you combine that with a loose labor market where they're not having to raise a bunch of wages, well, I tell you what, those earnings and all that stuff, probably very good from that perspective with FedEx in the coming quarters ahead. Hopefully some of you took my advice a few months ago and bought FedEx. Let me know down in the comments. If you did, I'd be happy to hear from you. Hopefully, guys, have a great day. Good luck with your investments.